Most entrepreneurs don't realize business credit is not automatic and that misunderstanding costs them approvals, limits, and opportunities. In this webinar, I break down exactly how business credit scores work and the simple actions any entrepreneur can take to raise them fast and legitimately. Ladies and gentlemen, my name is Noel A. Booker with Business Credit Builder.us. And at Business Credit Builder, what we do is help entrepreneurs and small business owners build business credit and access funding. Okay? I'm gonna share my screen and we're gonna get down into this webinar real quick. All right. Let's see. Okay. If you're watching this on YouTube, make sure you subscribe, like, and put a comment in. For a matter of fact, in the comment section, put the name of your business, what city you're in, so we'll know what you do. All right. Okay. Here we go, ladies and gentlemen. Simple steps any entrepreneur can take to raise business credit scores. Once again, ladies and gentlemen, my name is Noel A. Booker Sr. Businesscreditbuilder.us is the website. Check out the buttons at the bottom of the screen. The green button is how you can get a free guide on how to build business credit. Just go to businesscreditbuilder.us/free guide. The blue button is for in case you want to talk to us about the services that we provide, which is accounting, websites, and business credit, financing, everything like that. Schedule your free business credit consultation at businesscreditbuilder.us/consult. And if you think you qualify for funding now, go to slash get funding. Let's get to it. Business credit scores. These scores are in the business's name. That's what we're talking about. We're talking about business credit scores. A business owns its own credit profile and credit score, separate from you personally with your social. Then the business will then qualify for greater credit. This measures the business's ability to pay and not the business owner's ability to pay. Most major business credit scores range from 0 to 100. Your business credit score isn't automatic. Unlike for consumer credit scoring, you have to apply. You have to get an EIN from the IRS website. You have to get a DUNS number from Dun and Bradstreet. And that takes a few weeks to get. Tally up three separate payment experiences, right? Meaning you gotta buy something three times and make a payment three times. That's three separate payment experiences. Then Dun& Bradstreet starts tracking your business's financial activity and you get a PAYDEX score. And the PAYDEX score is the score that um, lenders and creditors look at to determine your credit worthiness. For more business credit reporting agencies, no payment experiences are necessary. They just start pulling your stuff. Business credit score, a mathematical model generally used to depict a business's risk of going 90 days late on an account within the next 12 months. This differs this differs from the personal credit scoring, which depicts risk over 24 months. Your business's credit profile is linked to your EIN and not your social. A business credit score depicts how likely the business is to default on payments. It has nothing to do with how the business owner pays his or her own bills. All credit reporting agencies show multiple business credit scores to evaluate different forms of risk. These scores are used by credit issuers, lenders, suppliers, vendors, and others who typically extend credit to businesses. There is no Fair Credit Reporting Act for business. Creditors and vendors are under no obligation to tell you which scores they rely on. And they don't have to tell you why they denied you. That's crucial too. Anyone can pull your business credit report. With no applicable Fair Credit Reporting Act, you may never know who's looking at your business credit reports. Okay? That can be not just vendors, lenders, and creditors, but also competitors, clients, and business prospects. So just consider your business information to be public information. Okay? Three big credit reporting agencies for business credit. All right? There are three main ones. These are the ones you need to make sure you're pulling. If you're building business credit, these three are the ones you need to make sure you're looking at because most likely lenders and creditors that you're applying for are looking at these three, a combination of these three, and maybe some more that I'm gonna tell you about. Okay, the first one is Dun and Bradstreet. That's the biggest and the best. And it's just for business. They don't do personal. Okay. Experian and Equifax. So that's the three. Dun and Bradstreet, Experian, and Equifax. Experian and Equifax, oh, they do both consumer and business. Okay. Smaller credit reporting agencies aren't checked as often. The big three matter a lot more, but there is one more to consider. Credit safe. This one you have to consider. Credit safe includes financial, trade, payment data. It also includes lease payments, payments to business credit cards, term loan payments, other debt payments made by a business. Okay. The key thing about that one is they do the lease payments. Okay. That's a key joint right there that'll help out small businesses. Okay. What goes into the scores? The CRAs all use slightly different methods. Okay. But the main criteria for scoring are the same. They might have different weights. Knowing how scores are calculated shows you how to raise your scores most effectively. Okay? So it's good to know with each one what they're weighing on, right? Okay. Dun& Bradstreet scoring criteria. This is what Dun& Bradstreet looks at. Bankruptcies and liens, lawsuits against your company, your credit card payments, your bill payments. Okay. To get a PAYDEX score, a business needs to have at least three trade accounts reported on their file. That's why I tell my clients, all right, the first thing that we're going to do is get three accounts reporting to Dun& Bradstreet. That means we get a PAYDEX score right away, right? Without a PAYDEX score, your chances are low. Your fundability is low, right? All right. It can take up to 60 days for those trades to report and a score to be established. Okay. So basically, this is what I tell people. It takes about 3 months to get your first five accounts. That's the first deal that you need to get to. You need to get five net 30 accounts to start building up your business credit. Okay. And that takes about 90 days. Okay. Three of them being Dun and Bradstreet, companies that report to Dun and Bradstreet, one that reports to Experian and one that reports to Equifax. Okay. The business credit score itself is calculated by using as many as 875 payments. Okay, Dun and Bradstreet scoring criteria for the PAYDEX score. It's a weighted average with more weight given to trade accounts that report higher amounts of credit extended. Okay. It gives less weight to trade accounts that report lower dollar amounts of credit. So what that tells me right off the top is you call when you get these accounts, you call them back. After they see that you make on-time payments, you call them back and ask them to increase your limits. Okay? To keep paydex scores up, if you can only pay one bill, pay the biggest one first. Past performance in bill payment is a main driver of this number. Okay. The higher the score, the lower the risk. A business can get a good business payday score by ensuring payments are made promptly to suppliers and vendors. Okay. So let's go into Experian. Now, the business side of Experian is called Experian Commercial. Okay. Large database. They have a large database. They apply their own analytic software. So they got their own software that's doing their calculation. Their reports include public records, scoring, trade information, financial history, court judgments. Oh, and UCC filings. Okay. Experian has the IntelliScore Plus. Okay, that's one of the services that they provide, right? That's one of the reports that they provide. Because all of these credit reporting agencies, what they're in the business of doing is this. They're taking in information, they're rebundling it up in different packages and selling it, right? For small business owners, we're looking to get the um the package that has the business credit report, right? And other companies they get information that give them different things, right? Okay, so Experian scoring criteria, IntelliScore Plus, historical behavior, payment history. Okay, so of what the criterias, the historical behavior, payment history is 5 to 10% of the total score. Okay. Current payment status, trade balances, and percent of accounts delinquent is 50 to 60% of the score. Current payment status, that's 50 to 60% of the score. Okay. Credit utilization, that's 10 to 15% of the score. Notice credit utilization was not even mentioned on Dun& and Bradstreet, but it is mentioned here on Experian. Credit utilization is 10 to 15%. Compared to personal, do you know what the criteria is on the personal? Is 30% of your score is credit utilization. But here at Experian, for your business, it's only 10 to 15%, which is significant. Company profile, age of business, industry risk, the size of business assessed by number of employees. This groups all together to be 5 to 10% of the total score. Okay? And 10 to 15% of the total score is based on derogatory items, collections, liens, judgments, bankruptcies. Okay? So with Experian, they're mainly looking at the current payment status of the accounts that you have. What status is it right now? And that's what they're looking at. 50 to 60% of that score is that. Okay? The score's basis includes number of trade experiences, outstanding balances and payment habits, credit utilization and trends over time, public record recency, frequency, and dollar amount. Demographics like years on file, the SIC codes, and the business size. Okay? SIC codes. That's crucial. So on Experian, they're using the SIC codes. On Dun& Bradstreet, they're using the NOS codes. At your Secretary of State, they're using the NOS codes. And all of this needs to line up perfectly, okay, in order for your business to be the most fundable that it can be. Okay. And these are the things that I find in all my clients. This is stuff that we're lining up. The SIC codes, the why you're in business, right? That's important. Why you're in business. Because like let's say your business makes bullets, right? So that's high risk. Okay? That's high risk. Okay? If you look at my blog, there's a article on my blog at businesscreditbuilder.us/blog. There's an article that shows you high business, high risk businesses and low risk businesses. Okay. Okay. Equifax scoring criteria. Okay. This is Equifax. This is the business side of Equifax we're talking about. They collect utility account information, trade vendor data, public records, bankruptcies, judgments, lawsuits, liens, information from the Small Business Financial Exchange. Okay? Let me go back to that. The Small Business Financial Exchange. All right? See, that's information that comes from public records. All right? Okay? So, this is important for you to know this. All right? Now, what can lower a business credit score? Current collections, liens, judgments, bankruptcies, and other derogatory public records, including status, recency, frequency, and dollar amounts. Increased trend in slow payment of obligations. Increase in number of business credit inquiries or applications generated by the business or the owner. The number of trade experiences, balances outstanding, payment habits, credit utilization, and trends over time. Short TIB, line of business, or the SIC code, size of the business, and other demographic data. Oh, I just realized what that TIB was. That's time in business. Short time in business. They would like you to be in business at least 3 years, actually. Okay. Now I'm not saying that you can't start getting funding if your business is brand new. But once your business gets to 3 years, then there are more businesses that will do business with you on a credit basis. Okay. Okay. What can raise a business credit score? Generally, the reverse of what can lower a business credit score. Some of these steps take time. Be patient. Great business, great business credit can be built quickly, but it's not immediate. Okay, basically this. Building business credit is a step-by-step process. Each step is needed for the next step. All right. So you can't skip steps. Okay. And it's not going to be fast. That's a lot of people, a lot of my clients, they be like, yo, I'm trying to go fast. I need to get to this money faster, right? Everybody trying to get to the money faster, right? But see, business credit, well, if your business is already operating, you should already have business credit. But business credit, it should be used like I don't need business credit now. I need it when I'm ready. Okay. So, get ready so you don't have to get ready. Get ready now so you don't have to get ready. All right. So when your business needs to have access to funding, your business can show that it has a positive payment history. Just like when you're a person, right? And you're going to get your first car. They want to know, one, you got some credit, you got a job, you got some money coming in, and how much collateral you got. You got some money to put down on it. Those are the three things. The three C's of credit. Credit, the three C's of funding: credit, cash flow, and collateral. Okay? So, be patient. Um First, let's start with the biggest things you can do. All right, let's start with the biggest things that you can do to help raise your business credit scores. Get the most favorable funding by paying all bills on time. This means a PAYDEX score of 80, Equifax risk score of 60 or better. For Experian, historical behavior payment history equals 5 to 10% of total score. Okay? For SBA loans, you won't be approved with low score. Period. Chances are good the SBA lender won't even submit your application to the SBA if your score doesn't meet the threshold. How well does your business pay its outstanding invoices? How does your business payment performance change over time? They're looking at all that. They're looking at trends and all that, right? Develop payment experiences for your business. This means using your credit for financing. It means paying everything back on time and in full. See, check this, right? If you have an existing business, business credit should be automatic because in order to operate your business, there's something you got to spend, right? Now, if those things that you have to spend on, when you pay them, and hopefully you pay them on time, that company reports to the business credit reporting agency. So your business is operating using the credit that it has. And that's what lenders want to see. They want to see that you're operating your business using the credit that you have, right? Like Walmart, 80% of all the money they take in is from business credit. They go get items to sell on credit and flip it. Okay. Every single time paid in full and on time. Okay. Boom. Raise business credit scores. Unleash the power of trade references. Payment experiences will matter the most if a creditor reports to the credit reporting agencies. But even non-reporting creditors can help. If you ask for a trade reference, trade references some of the only subjective information on credit reports. They go beyond the numbers. Okay. Give the CRAs what they want. Check your business credit reports regularly. Is information incomplete or missing altogether? Always update your records with all the credit reporting agencies when there are changes. These kinds of changes can be in ownership, overall number of employees, business entity, okay, like your corporation, LLC, etc., and locations, new addresses. Okay, make sure all that stuff is lined up at any given time. Okay, run your run your company financially responsible. This means retaining enough assets to cover business downturns. It means not overspending. It means not taking on debt that your company can handle. Um, Dun& Bradstreet in particular looks at chances a company will go bankrupt within a set time period. So, so take steps to keep your business's finances out of the red. Okay? Keep your trade payments in line. Pay rents, utilities on time. If your business can't, talk to your providers. Maybe you can work out a payment plan. Consider ways to cut expenses if you just can't keep up. You can't prevent every lawsuit, but if your business always honors its contracts and obligations, that will go a long way to staying out of court. The other legal issue is accidents. Okay. Keep workplaces clean and obstruction free. Get a risk assessment done by your insurer. These are just little things that you should know already, right? I'm not telling you something you don't know, right? They're in the business of loss prevention, and you should be too. Okay. Raise the business credit scores. Know the codes. Your business has two kinds of codes. We talked about this a little bit already. It has the SIC, Standard Industrial Classification, and that's slowly going away. And we have the NOSCO, the North American Industry Classification System. Industries can be either restricted or high risk. Okay. Um, in general, restricted and high risk industries have some things in common. There may be high risk of injury on the job, or the industry may engage in a lot of cash transactions. This is true no matter what the safety record of a particular business or the majority of its transaction types. Restricted and high risk industries. Per the SIC, these are restricted industries: energy, oil trading, or petroleum extraction or production, pawn shops. Much of the cannabis industry is restricted. But I got some loans for that though, okay? But we got, so if you're looking for a cannabis loan, we got you, all right? But it's hard to get those cannabis loans because they're restricted, right? Per the SIC, the following industries are high risk: auto, recreational vehicle or boat sales, travel agencies. These companies are subject to stricter underwriting guidelines. To be honest, when you choose yours, but there's no reason to choose the riskiest code. If a less risky one may apply, okay? So don't tell them you're blowing up buildings. Just say ad, we're the administrative consultants. You see what I'm saying, though, right? You don't have to lie, but something that's going to fit, but not tell them that you're a high risk, right? And keep the name of a high risk or restricted industry out of your business name. Okay? Okay? The business name tells a lot about your business too. That's why I always suggest to my clients use a name that they can't tell what you're doing. Okay? Chico's Bonds Bells can be renamed as Chico's. This is above board and honest. Okay. Increase your most recent high credit used. Credit issuers determine how high a credit limit is to issue based on how much you spend monthly and how recently you spent it. Get approved for limits more than 10 times of your existing limits just by monitoring and increasing your recent high credit used. And use your credit often so you can get more credit with every approval. Tame your utilization percentage, all right? So we know that utilization is a thing, right? Which one is it for? Experian, right? Credit issuers want to see you're using your credit, but maintaining it wisely, okay? They monitor these stats to approval decisions. Get approved for limits more than 10 times of your existing limits just by monitoring and responsibly managing utilization. Address any adverse accounts, right? Address any adverse accounts. Negative payment histories can diminish your ability to get loans and credit cards. It can increase the rates and payments on the credit and loans you do get. Know which accounts are reporting adverse credit history. Then you can work with the CRAs and the credit issuers. Correct inaccuracies and more positive history to offset the negative, right? So add more positive history to offset the negative. Okay. Monitor your business credit. Okay. You always have to monitor your business credit. And that's expensive too, I'm telling you. Like, so there's three places that you got to pull your business credit report: Dun& and Bradstreet, Experian, Equifax. And they charge you about $100 a month, right? So you do need to pull them so that you can know what's on there, right? So when you're filling out an application and you're giving your EIN number, they're looking right at your business credit. So you need to know what's on there too, right? You will never know what's going on unless you check. But you're often too busy to check. Monitoring makes it easy. We make it affordable. Save 90% over what Experian, Equifax, and Dun& Bradstreet charge by taking your customer success advisor. By talking to your customer, by talking to me, right? I'll show you how to work it out. All right. All right. Recap. Start with the Duns number and get three payment experiences so you can get a PAYDEX score. That means getting three accounts, net 30 accounts with vendors that report to Dun& Bradstreet, and make three payment experiences so they can issue you a PAYDEX score. That's how you get started. New business. Who's this? They're calling. They're calling. New business credit scores tend to be low. Credit reporting agencies all have slightly differing criteria for scoring, but results are very close. But what improves will improve them all. What improves one will improve them all. Start to improve your scores with on time payments and responsible financial stewardship. Work with the tier one to start getting payment experiences. Ask for trade references. Give CRAs all the data they request. Keep trade payments in line and try to stay out of legal entanglements. Address adverse accounts or SIC NOS codes that may be keeping scores down. Increase your most recent high credit use, but watch utilization. Monitor your business credit, right? Everybody, thank y'all for joining and sticking with me. Check out my blog for much more information. And don't forget to get your free guide on how to build business credit by going to businesscreditbuilder.us/free guide. Make sure you put some questions in the comment. Say something in the comments. If you're watching on YouTube, go to YouTube, check out my joint, right? Y'all know the routine. We getting out of here. Let me shut this thing down. What it be like? Yeah, yeah. Business Credit Builder. Peace.